Das Programm wird Sie benachrichtigen, sobald die Sprachübertragung beginnt. Die Sprachübertragung beginnt jetzt. Alle Teilnehmer befinden sich im
Hello and good morning. It's Monday, the 15th of January 2018. This is Berlin office calling and speaking from Admiral Markets. I'd like to welcome you to our daily webinar, Real-Time Daily Trading Ideas. We will have 5 days a week, 5 different traders. Today it's Monday, so in a couple of minutes, Jay will be speaking with you about the markets, but I have the honor to make the introduction. Maybe you hear it, I still have a little bit of cold, but I'm not the main speaker. The main speaker is Jay, and hopefully he has not a cold. But it's a cold winter in Berlin, so hopefully you will have maybe a little bit warmer. But anyway, let's start now. We will have a goal, 15 to 20 minutes. We will talk about trading ideas, strategies, market screening, and maybe 1 or 2 of your questions directly answered in this webinar. So let's have a smooth start like always. The start will always be a disclaimer included. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you start Forex and CFD trading, please start with a demo account, make yourself familiar with your personal risk management, long and short trading, and all with what are involved. If you'd like to see the key information documents, the kits, what is new since January 2018, you will find them on our webpage, and all other, of course, there too. This is me. My name is Jens. My English is made in Germany, but hopefully some of my quality too. But like I said to the introduction, I'm not the main speaker. The main speaker is Jay. This is our scheme. Today it's Monday, so it's Jay's day. On Tuesday it's Paul's day. On Wednesday it's Mike's day, on Thursday it's Nenad's day, and on Friday it's Dirk's day. And if I have a cold, sometimes I speak too fast too. Today's actions are tomorrow results. Our leading day traders live every workday on the same time. And of course, we would be also really happy if you like to trade Forex and CFDs, if you do it with Admiral Markets. We have many, many benefits like you see on our screen here. For example, our bestseller DAX 30 CFD, the German index CFD, typically fixed spread of just 0.8 points. Mini lots trading for CFD is possible, choosable leverage like up to 500, no stop distances, best order execution, straight through processing, and everything what you can see on your screen right now. All details about that also to find on admiralmarkets.com, of course. Also, our regulatory background is to find there. Admiral Markets UK Ltd is authorized and regulated by the Financial Conduct Authority. And if you like to call us, here you see the number. If you'd like to send an email, here you see the email address. And a couple of hours later, you will find our live webinar recorded in our YouTube channel. So enough from my side. Now it's time for Jay. Hi, good morning, Jay. I hope you have not a cold like me. Sorry if I make some mistakes, but if you have a cold, sometimes you are feeling sick and you don't know what to say. I don't know how to say sorry better. So Jay, now it's your time, hopefully without a cold.
Good morning to you, Jens. Good morning to you, traders. Let me see if I can share my screen. And Jens, I hope you're going to feel better very soon. I'm noticing you're catching a cold quite frequently, so lots of vitamin C, my friend, and don't work so much. Better start trading. It's not as stressful. All right, let's get right into it. Last week we had a short euro dollar. The reason was that we had, well, let me not repeat the reasons. Our trade structure was to watch for a pullback and keep an eye on sentiment. And the trade here is a screenshot upon the completion of our webinar, and then the trade materialized right away. So towards the end of the day, we already took our profits. Both positions got triggered. And then, as you can see, a very, very nice accumulation phase from the institutional side. And then it's been a one-way street. And as one of my first senior traders always taught me, the market is not a one-way street. Well, the euro is seeing a lot of inflows right now and is exhibiting the characteristics of a one-way street. So we're watching for pullbacks actually to get in. As we will see in a little bit, the positioning of the dealers is getting extremely short. So watch for a future pullback to materialize, to jump back on this bandwagon, even though the market seems to be getting ahead of itself a little bit. By the way, where are we heading? You can take the Big Mac index, you can take the PPP model off of the World Bank website. Anywhere between 125 and 135 shall be the truth. So my expectations is keep it simple, stupid, and successful. Let's call it 130 area, but we will see the opposing big boy side coming in once that move is about to peter out. This morning, strength versus weakness. We saw some strength in the Aussie dollar in the overnight session, and then some continued weakness in the US dollar. It's a US holiday today, Martin Luther King Day over there, so don't expect much liquidity in the market. We have a few risk events this week. We have the pound. On Tuesday, CPI numbers. We have Jordan speaking of the Swiss National Bank. Then we have the rate decision and the quarterly monetary report by the Bank of Canada this Wednesday. There's a price expectation in the market, 80% probability, slightly above 80% probability for a rate increase of 25 basis points by the Bank of Canada. We'll allude to that in a little bit. We have the Aussie dollar employment situation on Thursday. And then we have Chinese data, which will be important for Aussie and New Zealand. Also Thursday, very early in the morning. And Premier Lee is expecting numbers to come in higher than the stated 6.5% GDP growth for 2017 by the National Congress. And then we have on Thursday later in the day building permits, which is a leading indicator in the US. And then the claims. And last but not least, on Friday, we might get a little bit of volatility in terms of pound with a weaker than last time expected retail sales number, month-on-month development. So we have a few reasons why the market may actually start moving. On Monday, Martin Luther King Day, low liquidity. Thursday, building permits, and Friday, Michigan also, University of Michigan consumer sentiment is a leading indicator, so pay some attention to that, please. And then my computer is slow again. Canadian dollar rate decision, as alluded to, 25 bips expected. Canada's economy is operating at full capacity, and slack in the labor market is diminishing. We had towards the end of last year the Bank of Canada's fourth quarter business survey, and the quant headlines were a bit soft, but the qualitative aspect of that survey were upbeat. And so in addition, we had a very solid labor market situation in December, and that caused rate hike probabilities to increase from around 50% to above 80% currently. Then on the business side, within the survey, it came out that the businesses' investment and hiring intentions are really good. Hiring intentions were the second highest reading in the past 2 years. So that stood out there. And inflation expectations on the business side and the consumer side are still modest, but capacity pressures are increasing, hinting at future inflation. And we have another thing that's hinting at future inflation, similar to the US, and that is the severe labor shortage. Currently in Canada, only the oil and gas exploration regions do not exhibit severe labor shortages. The rest of the economy is, so that is hinting at future inflation. Hence another reason why that increased rate hike probability being priced into the market. November inflation stood at 1.7. This is actually a mean out of 3 different gauges, just shy of the 2% that the Bank of Canada actually wants to achieve, similar to all other Western central banks. Caveat here, please, guys, is that the hike could be threatened if the US is taking a harder stance within their NAFTA negotiations, North Atlantic Free Trade or agreements. As you all recall, Trump is driving a harder line there. He wants US to come first and is renegotiating a lot of these trade agreements, actually dropped out of the Asia Pacific one. Complete idiocy, but hey, what can you say? We've had this in the past again, so if you're a futures trader, try to read up a little bit if you care about past presidents and their trade stances. And every single time we had stronger stances on trade, we saw a softer dollar. So there are some research analysts that are pointing towards a stronger dollar this year. I side with the camp. I expect a softer dollar, but we'll see. We'll trade what we'll see, not what we think, right? This decision will also see the quarterly monetary policy report that I said, and we expect this to be a little bit hawkish. Why? Because the Bank of Canada needs to sort of give an argument why they keep hiking. And we also expect a hint of caution because of trade issues. And this hint of caution will be done intentionally by the Bank of Canada. Why? Because they like to try to dampen the advance of the Canadian dollar. No central bank currently still wants a very strong currency. And what else do we have? I apologize, my computer is still slow. Here we go, Euro. Wednesday, we have final CPI. So final, that's already priced in. It's expected to come in a little bit low, and inflation expectations are coming off in the Euro area as well. So again, that is a reason why you may want to look for a potential pullback or setback or retracement rather in the Euro. It could be watched more closely this time, since the December ECB meetings showed a more hawkish tone. And within the meetings, there was a statement alluding to that beginning of this year, 2018, the ECB may actually start communicating with the market in a more concrete way in regards to tapering their asset purchasing program. Well, wait and see, because any tapering and tampering and taming of that asset purchase program is actually an indirect rate hike, meaning higher rates, meaning higher Euro. Okay, on the pound, Tuesday CPI, 3% expected year-on-year versus 3.1, and then core CPI. This is consumer price index. It's an inflation gauge that the market is looking at very closely. So that's coming off a little bit, could speak for potential weakness, but we'll see. If the deviation is strong enough, all of you who day trade can actually make a quick buck. At its December decision, the Bank of England opined that inflation is likely to be close to its peak. You may recall that we talked about it here in the morning meeting, and they said it will decline towards 2% target in the medium term. They actually expected that peak in October, and if you may recall, that actually didn't materialize, but it's coming off now. December PMI, that's the Purchasing Managers Index, they actually showed that selling prices rose for a 20th successive month. And those price increases are being passed on to the consumer, and the disposable income for the UK consumer is not rising. Wages are not rising enough yet, so that's actually bad. Hence, the retail numbers that we'll see towards the end of the week are expected to come in bad. Hopefully, you'll start seeing how all of this is connected. Yeah, it all makes sense, and it gives you a good impression and opinion on how a certain economy is developing over the course of the year, and that gives us plenty of opportunities to make money. So the services PMI actually said that average prices charged increased at a robust pace. So again, prices are increasing. That means rates expected to increase, and that actually means pound expected to increase. On the other hand, you have opposing forces. If the consumer driving the economy is not making enough money, if the financial services industry, due to a Brexit, is leaving the island, which is all to be seen. I still opine that there might not ever be a Brexit, but we'll have to see about that in 2019. So we'll see that robust pace across the services sector. Prices are increasing, although rate of inflation eased from November's peak. So what do we have on Friday? Retail sales, as alluded to, expected to come in much worse than last time. And recently there was a BRC retail sales indicator that suggested that nominal consumer spending was higher in December year-on-year. Okay, fine. We'll have to see how the pound reacts. Currently, and we'll see that there's a very strong and extreme short positioning by the dealers. So I'd rather side with the dealers and see if I can sell top edges in the pound. China, Thursday, fourth quarter GDP, slightly weaker than last time expected on year-on-year and Q-on-Q basis, but I said it already. Premier Li says will come in stronger than alluded to. They said at the beginning of the year they want 6.5% in 2017, and he thinks they're going to come out at 6.9. That's all positive for Aussie dollar. If these numbers are coming in positive, that's positive for the Aussie dollar. We saw strong external demand in 2017 and a robust pipeline of investment projects that are all proceeding to completion. If you haven't read up on it yet, please do so. Google One Road, One Belt, One Belt, One Road. That's the new Silk Road of China, and that positions China as the #1 global country, world power, superpower, and economy for the coming future. So US is coming off, China new number one. Market expects the growth momentum to slow a bit, so all of that is already priced in. There's a slowdown in investments, especially in residential and non-residential construction, and that's a good thing. If you look at Google Earth, we have dozens of cities, multiple cities in China that are ghost towns. Yeah? They were just erected, built, and people didn't come to live in it. Amazing. So all of that crap is stopping, and they're getting their crap together. Aussie, Thursday employment change and employment rate. As you can see, not as good expected this time. But we have to say, last time the number was extremely strong. They in fact added 40,000 full-time jobs last time in the Australian economy. That was super. The participation rate is also expected to come off a little bit. So job growth is running well ahead of what other indicators, such as the ANZ job ads, suggested. And so the market expects a little bit of a correction and some smaller gains going forward. So if you don't know this, that the market is pricing this in, the pros, you may look at this number and you may be positioning for a short Aussie dollar, but not necessarily. Some of this is already expected. So let's see how Wednesday Westpac consumer sentiment is coming in. It was previously at 3.6%, so that was a good number. So we'll see overnight we had some strength in the Aussie dollar, and if the Chinese numbers that we looked at earlier are going to come in strong, I'm looking to buy the Aussie dollar. New Zealand, to finish up, we have the business confidence, which is a quarterly release on Monday, and the number it came in previously was at 5, so anything above 0 is good, but 5 is really low. I mean, we're coming from numbers 52, right, a couple of years ago, and we're at 5, and we're keeping on decreasing, so that's not that good. Tuesday, we have the global dairy trade price index, and that comes on twice per month, and it was previously at 2.2%, which was a positive surprise. So milk is a very large contributor to New Zealand's GDP. Hence, the traders and the market is always eyeing the GDT price index and how that is changing as an indication for strength or weakness, inflows, outflows into the New Zealand or out of the New Zealand dollar. Thursday, we have the business NZ manufacturing index that comes out monthly, guys. It was previously at 57.7, and that was towards the high of its range. So that's positive. So we'll have one thing not that positive, and then we have two positives. So New Zealand dollar looking pretty good here, and the extreme positioning by the dealers has come off, unfortunately. Speaking of which, let's look at positioning and volatility. Commitment of traders, we see a very continuing build out of extreme shorts by the dealers on the euro side, and on the pound side, the same thing is happening. So while I'm not super keen fundamentally to short the euro, I think we can expect some volatility, and if you know how to read the footprint by the big boys, then we'll have some serious opportunities to make some money. Why? Because look at the volatility. Euro last week was at 5.5. We're at 7.77 this morning. Pound, similar thing, 6.05, 7.43. Yen 5.93, 7.49, and the VIX is already also starting to climb. That's great. That's awesome. That means we can make good money. It also means in terms of setting stops for your positions, you may want to think to reverting back to something utilizing average daily range or average true range, anything that includes volatility in your stop setting, okay? In addition, maybe to market structure. And then risk reversals for 3 months. For this morning, we have a long in euro dollar, obviously. We have a long for pound for cable. That already materialized. Pound just went through the roof. We have euro pound long for Monday. That's sideways. Strong versus strong can only mean sideways. And we have long euro Swissy. Well, we had side deposits come out for Swissy just a few minutes ago. Super strong inflows into the Swiss right on the back of it. So that's not happening either. But the first two are happening. Put call ratios, bullish for Monday's London session, Aussie, pound, euro, yen, and gold. And bearish for Monday's London session, Canadian dollar and Swiss franc. That's quite interesting, actually, because of the trade that I want to take this morning, or that I started taking. I'm looking to short dollar versus Canadian dollar. Why? Dollar, I'm seeing weakness across the board right now. Thursday, we expect some mixed economic numbers. We just talked about them. And Friday, we expect some positive economic numbers, with the University of Michigan expected to come in stronger. So I need to manage this trade tightly. On the Canadian dollar side, we have this expected rate increase on Wednesday. And I expect the situation where we buy the rumor, sell the fact. So whereas we may weaken the Canadian dollar today, I expect it to strengthen into the rate decision on Wednesday. That's just my expectation. Doesn't mean it has to happen that way. It's just my expectation. And on the back of it, I'm looking over to WTI, where it's 64.16. So oil continues to trade strong, which has a high correlation to the Canadian dollar. Trade structure, I already am short with the starter position, and I have 2 levels identified in the chart where I'd like to add to the short position. And the risk for my trade is that the dollar is starting to see some inflows, so a change in sentiment, and or oil would be weakening, i.e. coming off of a top edge. Not currently seeing that, but hey, can always happen. And or we get some negative NAFTA headlines in terms of the trade negotiations going on. So here's the trade. As you can see, starter position is already short. I'm looking for us to trip liquidity below these swings into the former massive bottom edge. We'll see. Maybe we'll get there, maybe we won't. There's 2 more levels here where we had former POCs where I'm looking to add to the short. Above it, I get stopped out. So if we go through all of these POCs, then obviously my expectation is wrong, and I'm losing a full % of my account. And that finishes us off for Monday, January 15th, 2018. I hope it wasn't too boring. Unfortunately, guys, this is what the guys are looking at the big trading desk and the funds. It's all fundamentals, and then it's thinking about a smart trade, putting it on and letting it do whatever it does. I wish you all a super good trading week. Let's make some money. If you have any questions, send them to Jens, and Jens, please send them to me. Thank you very much.
Yeah, and like I said to the introduction, 5 days a week, 5 different traders. If you like Jay, like we do, join him next Monday again. And if you like to see different trading styles, join the other 4 days. Every day a little bit different. Every trader is unique. Jay is unique, Paul is unique, Dirk is unique, and all the others are also unique. So let's join the other days next time, tomorrow, to the same time. Have a nice day, good trades. See you tomorrow. Bye-bye.